Hello traders, this is Senior Account Manager Adam House hosting the daily European Open webinar for this Wednesday, the 16th of the 8th, 2017. Hope this presentation finds you all well. A short general advice warning, the Forex trading involves trading risk capital. The following education session is not to be treated as personal advice. Forex CT provides general advice only that does not take into account your personal needs or circumstances. Okie dokie, we'll get underway. So for those that are new to the webinar, held daily on the European Open, we have a look mainly at the daily technical pairs that come to your email, looking at the AUD USD, the pound, and this should be the pound. Sorry, one correction. My apologies. Okay, so we look at the AUD USD, the pound against the US dollar, the euro against the US dollar. Also have a look at the big mover in the market, which moves sometimes the most, often the most, the US dollar against the yen, British pound against the yen, crude oil or CL on your platform, gold, and of course the S&P ASX 200. So a lot's happened on the market overnight. We saw the markets generally improve, or market sentiment really improve after North Korea said on Tuesday that it delayed a decision on a plan to fire missiles at the US Pacific territory, which is good news for everyone. At the same time, South Korean President Moon Jae-in said that there would be no military action upon the Korean Peninsula without Seoul's consent, and that the government would prevent war by all means. So market participants really saw that as quite positive. Remember that, in times of optimism and, sort of increased confidence, that you see the equities markets improving generally. That corresponds to, our local share market, obviously the ASX, the Dow, the US dollar generally. And we saw some, pretty healthy improvement on an otherwise bearish US dollar over the course of last week on that tension, but that's sort of relatively eased. Now, that's not to discount, obviously the importance of the issue at hand. Obviously, there's, an increased threat. It has been sort of, downgraded a little bit, but it's not something that's gone away. So it would pay, sort of pay attention to actually look ahead to the news and keep your ear to the ground in terms of, announcements coming out on that issue, because it broadly represents a bit of an umbrella of sentiment in the market at the moment. The greenback also found some support after the New York Fed President William Dudley had indicated that he favoured another interest rate hike this year if the economic conditions evolved in line with his expectations. So looking ahead tonight, we have a very important announcement coming up relating to that, and that is, of course, the FOMC meeting minutes at 4 o'clock in the morning. Obviously not a very healthy time for us Antipodeans, but nevertheless, we can't alter that. So at 4 o'clock in the morning, and that's during the market hours, obviously over in the US, we'll get the FOMC meeting minutes being released. Now, for those of you who aren't aware, the FOMC meeting minutes are released from the Fed, and they're really a broad statement relating to general economic outlook and the likelihood of future rate increases. So when we look at currency moving on the market, a lot of it, in fact, a big determinant of currency movement generally is interest rates. Okay, the higher interest rate attached to a currency, then obviously the more bullish it is. The US has had 2 rate increases this year so far, and the market will be looking ahead to that announcement at 4 o'clock in the morning to give some indication about the likelihood of urgency, and if it's going to happen, on a third rate increase. Okay, and we generally take sort of, further hints at a rate increase as being bullish for the USD index generally, and vice versa if they're indicating a more relaxed or dovish sentiment in relation to that announcement, then we're looking at more bearish. So going through all the pairs in detail here, we've obviously had the AUD USD stabilize a little bit at this low on stochastics. We've had a good, level of support here. Bear in mind that overnight, if we get sort of a renewed confidence in the US dollar, then, by rights, that'll, as an inversely correlated pair to the US dollar, that will probably drive the pair down. as will the euro and the pound as well. Now the pound, interestingly, had a big sell-off yesterday. We sent out a text alert around about 5:30, indicating that there will be CPI announcements on the pound at 6:30 last night, our time, or AEST. Those inflation expectations came in 0.1% lower than expected. And this resulted in a massive drop on the pound. And as you can see, around about the 6:30 mark, if we go to an hour chart here, you can see this massive cascading sell that happened around that announcement. Now, we texted that at 5:30, indicating, Trading Central's preference with that. But if inflation was going to miss expectations, then that would have resulted in a bearish action in the market. The reason for that is if you get lower than expectations on inflation, and inflation being a measure of the cost of goods over time, if prices aren't accelerating at the forecasted rate, then obviously there's less impetus or less pressure on that respective country to raise rates to combat inflation. So if there's lower inflation, usually that would actually translate into less urgency for rate increases. Now, the pound or the Great British economy has held interest rates at historical lows at around about 0.25%. And respective to the upgrade of economic forecasts when that happened, the Bank of England Governor Carney indicated that there would have been a downgrade in spending and general economic outlook as well. So, those factors combined have really led, broadly speaking, to a sell-off of the pound. And obviously we had the US dollar strengthen overnight on the improved sentiment around the international conflict, as discussed. But we also had a very important announcement as well last night on advanced retail sales for the US. Now, advanced retail sales measuring consumption in the economy came in at 0.6% against 0.3 forecast. So again, it's all about the likelihood of interest rate increases. Okay, what does this preliminary data tell us? Well, if advanced retail sales are higher than expected, then again that places more pressure on inflation and more pressure on a respective country to raise rates to combat inflation. So again, every precursing fundamental analysis or fundamental announcement is in some way indicative of future rate increases. And this is what moves the market. In fact, if you wanted to study just one concept of the market that really moves the market, it's all about interest rates. So, as stated before, downgraded economic forecast, lower inflation led to a sell-off of the pound. Correspondingly, we had that increase in advanced retail sales for the US, which again drove this pair down against a stronger US dollar. Now, we've got a crucial level of resistance about to be tested on the USD Japanese yen, and ultimately we'll be looking forward to this announcement at 4 o'clock in the morning on the FOMC. Now, if we get the more hawkish comments about, the Fed raising rates, then look, the US may very well rally, and it's found a good level of support here, as you can see on the chart, at around about 108.75. Correspondingly, that sell-off of gold has really sort of ensued as well, and we talk about this a lot. In fact, I mention it on every webinar, is that the market may be split up into two separate entities. You have the equities market on one side being the US dollar, and on the other side you have the safe havens like the gold and the yen. So when there's confidence in the US, investors generally sort of shy away from gold, but if there's pessimism in the market, like over last week, as you can see here at the height of the North Korean tension, then we have a rise in gold and vice versa. So that improvement generally in US economic conditions and maybe some hawkish comments from the Fed at 4 o'clock in the morning could spur that US dollar to fresh highs, and we might see a resumption of an uptrend. Correspondingly, gold would actually be expected to follow suit on the downward trend if that were to happen as well. Just some other things to note, generally on the markets overnight. We saw oil prices stabilise after plumbing fresh 3-week lows earlier, as the stronger US dollar and concerns over a global supply glut continued to weigh. There were concerns over slowing demand from China, the world's second largest oil consumer, which pressured the prices lower. And a report on Monday pointed to a drop in crude demand from Chinese refiners in July. So generally, oil prices remain vulnerable to bearish sentiment. Most traders are assessing supply and demand figures here to be able to, in a sense, determine how close the oil market is to rebalancing. The American Petroleum Institute was to release its latest US inventories report later Tuesday ahead of the official storage figures, and we saw that was actually a massive decline, in supply against expectations in terms of the supply. So, given that information, less supply or less inventories generally means correspondingly bullish sentiment, as you would think for the US dollar. Sorry, for oil. So as we can see, this represents a really good scenario here, okay? You've got a good testing of support here on the trend line, and it's rejected it. And those negative figures on supply have really sort of ultimate fresh low be achieved. And these entry points on a daily chart are very, very good to look out for when it comes to entering long on oil. Now, we did issue a text alert just earlier on that. And the text alert is a long position above 47.32, which is the pivot. And as you can see, the price is above the pivot at the moment, with further targets at 48.15, 48.45, and 48.9 in extension. Okay, and that's based upon a 9.2 million barrel reduction on the API weekly crude oil stock. So that really sort of is an example of how you can start to apply fundamental and technical data combined. You factor in the fundamental analysis as being a barrel shortage of 9.2 million barrels. Obviously, it's less supply than it drives the price up. And from a technical point of view, you can see this fresh low on stochastics here as a low in the market. And that really does give a good scenario for a buy at the moment. Correspondingly, we've seen some improvement in the ASX as well. And we've seen that sort of, rally to fresh highs. Really sort of bullish day for the ASX generally. Just on renewed optimism, I think around obviously the international tensions, but also on the fact that we've got improved company earnings reports generally as well. So we're seeing quite a big rise in that regard. So probably look to further upside over the next few days, next few weeks over the ASX. That's assuming that the military conflict in Korea, North Korea, and obviously the US remains stable. There's no knowing that. Obviously, we're not economics professors and we're not, sort of geopolitical experts, but we do know that, rising tension usually translates into pessimism and downward pressure on instruments such as the ASX. But today that's been relieved, and today we're seeing some renewed bullish pressure on that particular index. So, all this tied up in a nutshell. Okay, obviously the big announcement overnight will be the FOMC. The main message is that investors will be looking to some comment from the Fed members about increased urgency around interest rate increases. Okay, we've had two so far this year. Exactly how much immediacy, how much urgency are the Fed placing on that third interest rate decision? Well, we had advanced retail sales better than expected. We have slightly improving conditions in terms of economic growth, and the international tension is subsiding for now between North Korea and the US. So, looking favourably on fundamental analysis, one might say under the best conditions that they have, that they would be actually further buying this pair. So, if we quick look at the daily technical levels from today, from Trading Central on the USD JPY, we see a further upside or alternative scenario. Let's just have a look here. So we have long positions preferred above 110.25, which is where the price is now at 110.64. Trading Central have further targets of 110.85 and 111.25 in extension. So hopefully that's given you a quick update and a thorough understanding about the fundamental and technical indicators that are affecting the market. If you have any questions particularly about the presentation today or anything discussed about the economic events at hand, then please get in contact with myself if I'm your account manager or your respective account manager here at Forex Capital Trading. For the time being, thank you very much for your attendance. Best of luck to you all. Happy and safe trading. Thank you.